not just a.
No, my neck. I got my mother's neck. How that happened?
I see Ben and Mike Rakoff. Hi, Mike. Hi, Mike.
Hi there.
Hi. How are you doing?
Oh, I'm hanging in there.
What's the latest? Uh-oh. What's the latest on how the PPP loans are going today and yesterday? What do you got?
I have two clients that said they got approval already from what got submitted yesterday. So.
And they heard that through their bank.
Yep.
You know what banks they were?
No, not off the top of my head. They called wanting to set up a time to talk about how to make sure they can maximize their forgiveness, that they had approval. So.
Did you tell them to listen to this presentation by our esteemed colleague?
I did not.
You should have.
Just came in this afternoon, so I didn't think of that. So.
Hi, Graham.
Afternoon.
Wow, we have 40 participants. 35 attendees are on. Okay, yeah, 42 participants.
Rapidly growing.
So we'll try to kick it off here shortly. And we have a list of questions as well. Yes, please. Thanks so much for doing this, Graham. Again.
Of course.
You want to kick it off right at 3 or wait a few minutes?
I'd say a few minutes just to make sure people that are starting to join at 3 or get in. So maybe at 3:03 to 3:05, somewhere around there.
Okay.
And if we have a ton of questions, I don't have a hard cutoff at 4. I don't know if other people do, but I'd be happy to stay on at least until 4:30 and continue answering questions.
Great. I have a call scheduled at 4:15, but we can keep the Zoom webinar running.
Okay. Have you guys heard anything about round 2 funding and where we are?
We were just talking about that. Brian, do you have anything new? You're on mute if you do.
I just sent an email, just came in about 5 minutes ago from Kathy over at Seattle about the funding and the sizes and the whole thing.
Kathy Griffith?
Yeah.
Okay. Do you want to share that with the 50 or so people that are on?
Sure, I can, I'll send it over to you.
Or just read it. No, I think you could just read it.
Okay.
That's what I was thinking.
I'm pulling it up on my phone. Can they hear me? Everybody hear me?
Yep.
Okay, it says more than 475,000 loans valued at more than 52 billion were processed by more than 5,100 lenders. Small lenders are leading the way. More than 331,000, or nearly 70% of all the loans approved, are from small lenders with fewer than 10 billion in assets. When combined with medium lenders whose assets are between 10 and 50 billion, 87% of all approved loans, 415 out of the 475, have been made by small to medium lenders. In terms of dollar volume, nearly 30 billion in approved loans are from small lenders and 40 billion in approved loans from both small and medium lenders. So far, 77% of the loan volume has been processed by small and medium lenders. The Paycheck Protection Program and Healthcare Enhancement Act stated a minimum of 30 billion in PPP loans needed to be processed by small lenders. This cap has already been reached as loans from small lenders continue to be approved. That's it.
Great, thank you.
And is that nationwide or Washington State?
Not nationwide.
Okay.
I'll send the email out so everybody can have a copy.
Great, thank you.
Sure.
We can post that on news on our website. Yep. All right, so it's 3:02. And if you would, hi, Mark, Hannah, one of our
Hi there.
business advisors there. So, all right, great. So, Graham, do you want to go ahead and share your screen, and then we will get going. I'll do the introduction and you can take it over.
All right.
So, and if advisors, if you have any questions, if you would like to ask any questions, you have the ability to do that. And for those of you who have joined us, I see we have 77 participants now. Thank you very much for joining this webinar today. I'd like to mention, I see we're on slide 19, Graham, if you want to get it to number 1. I wanted to, again, personally thank Graham Ralston. We are blessed to have Graham in our community. He's got a very unique set of skill sets and experiences that make his value to our community really important. So here's a little bit about Graham. He was born and raised in Port Angeles, and his family has been here for over 120 years. He has 8 years as a senior executive at DOT, and at the DOT he ran a national small business program that focused on finance, procurement, technical assistance. They financed billion-dollar infrastructure projects, and he advised the Secretary of Transportation as part of the DOT senior team. He's been a licensed attorney for over 10 years, and his focus is on business law, probate, estate planning, tax, and real estate. And he has offices in Sequim, Port Townsend, and Port Angeles, and Seattle. So with that, I will go ahead and let Graham take it from here. And again, this is really complex information, and we have 8 different business advisors between the 2 counties. Now, Graham has been very, very generous with his time over the last, 6 weeks. And as a small business owner himself, if he has found that the realities of the situation make it so that in order for him to be able to continue his business in a smart way, he needs to sign people up on a fee basis going forward. Any kind of general information he's happy to help with, and he will continue with these webinars. But going forward, if you want to have individualized support from Graham, we recommend you contact him directly to engage in a fee-based agreement. Okay, with that, again, we're really lucky to have Graham here doing this for us, and thank you so much for your time and sharing your expertise with everyone that is able to join us today.
Of course, and thank you again, Colleen, for spearheading everything. And this, of course, is a collection. I may be delivering this presentation, but other advisors have already jumped in and provided comments. So this really is a collection of all of us working together and collaboratively to support the local community here on the peninsula and you small business owners. So a big thank you to all the other advisors who are also panelists on the call today as well for the presentation. I'm going to go ahead and turn off my video. so that I'm focused just on the presentation. And just as a disclaimer, this presentation is not legal advice. Please make sure you seek advice from your attorney or professional counsel. Guidance is consistently changing right now. And be aware that information in these slides could become outdated. So please continue to update yourself on any changes. We will try and do our best to post any significant guidance changes, whether it's to my slides that are posted to the website, but it's still your responsibility to make sure that you're staying up to date. And we are aware that there is new guidance that we're expecting to be released from the SBA and Treasury. So don't think that this is a one-all and stop in terms of this presentation. Please make sure you update yourself. And also for those of you that maybe didn't make it in the second round, which we know that the SBA is still accepting applications or approving PPP applications through your lenders, don't give up hope on the PPP yet, but also if you or someone you know didn't participate in this, in the PPP program, they'd still be eligible for the employee retention credit, which we did a presentation on a couple weeks ago. And there are additional options. So make sure you still continue to keep hope in what you're able to do as a small business owner moving forward. This presentation is focused specifically on the forgiveness portion. We're not going to be focused on the actual application or the lending, going through the approval process. If you're looking for more information on those, there are recorded webinars already posted at chooseclownfirst.com. This presentation is more so going to start from the beginning stages of when does forgiveness start, what counts as part of forgiveness, documentation, and your request for loan forgiveness, and some of our still outstanding questions regarding PPP forgiveness. So when does forgiveness start? It starts on the day that funds are made available to you or 10 days from SBA approval of the loan, whichever is sooner, and lasts for 8 weeks from that date. So for example, many of you small business owners that were in round 2, if your application was approved yesterday on April 27th by the SBA, your lender funds must be originated within 10 days of April 27th. Let's say that they're originated on May 5th. Well, your 8-week forgiveness period would start on May 5th and go through June 29th. And what can you use this loan for if you've been approved? Well, these loans should be used for your payroll costs, including benefits, interest on mortgage obligations incurred before February 15th or rent before the 15th of February, and utilities which service began before February 15th, 2020. And what counts specifically is payroll costs. That's based on this last slide, the first bullet, okay? Going into a little bit more detail of what those payroll costs are. That's your salary, wages, commissions, or tips, but this is capped at $100,000, which on a monthly basis would be approximately $8,300. This also includes employee benefits, which includes your medical premiums, state and local taxes assessed on compensation. And for a sole proprietor and independent contractor, wages, commissions, income, or net earnings from self-employment was also capped at $100,000 on an annualized basis. And we'll get to a specific slide on self-employment later in the presentation. How much of your loan will be forgiven? Well, it's up to 100% of that loan. You might owe money on your loan if the loan amount for anything, if you're using those proceeds for anything, then payroll costs, mortgage interest, rent, utilities over the 8 weeks after receiving the loan. No more than 25% of the forgiven amount may be used for non-payroll costs. You might also owe money back on your loan if you do not maintain your staff and payroll at certain levels, which we're going to go into more detail. And in addition, any proceeds, many of you applied for that EIDL loan with the advance, which was up to $10,000. And if you receive that, then any amount that you received will also be deducted from the loan forgiveness amount on that PPP loan. For example, if your total loan was $100,000 and you were eligible for $100,000 of forgiveness, and you received a $10,000 advance from the EIDL, then now your forgiveness amount would be at $90,000 underneath in your 8-week forgiveness period. Now, in this slide, we talked about the 2 different scenarios on full-time equivalent employees or maintaining staff and payroll. We're going to go into a little bit more detail first on decreases in staff or full-time equivalent employee. So if let's say you had 10 full-time equivalent employees, which we do not have a definition yet from the SBA, we would need to be looking at comparing that against the average number of full-time equivalent employees of the borrower between February 15th, 2019 and June 20th, 2019, or the average number of full-time equivalent employees of the borrower between January 1, 2020 and February 29th, 2020. If you are deemed a seasonal employer by the SBA, then you must use the election at A above. Otherwise, you can choose between the two in terms of what is more preferable or what is more beneficial for you as the small business owner. So this is a great, if you're a visual person like me, this is a great kind of quick snapshot on how this might work in a reduction of full-time equivalent employees. Let's say during the 8-week covered period, in this scenario, someone had a loan from April 13th through June 8th, and they had 240 employees. In a comparison of a previous employee headcount scenario, there was 300. You would now be reducing your potential forgiveness by 20%. That means that if your loan forgiveness amount was approximately 2.2 million, well, you'd be reducing the forgiveness amount by 20%, which comes out to be approximately $440,000. And now your revised forgiveness is 1.76 million. That was one way that your forgiveness amount could be decreased. The other way that your forgiveness amount could be decreased is a decrease in the base based upon salary reduction of your employees. Now, if you have an employee who made less than $100,000 in annualized wages in 2019 and received a reduction in pay of more than 25% during the covered period, then you could see a reduction in dollar for dollar forgiveness in anything below 75%. For example, if you had an employee that made $50,000 and now they're receiving, or 25% less than that is, let's see here, if it was 12.5, it's 12.54. I'm doing some math in my head right now. If it was 37,500 at 75%, and now you're paying that employee $30,000, you're now dropping below the 75% threshold, and your forgiveness amount would be reduced at that 37,500 minus 30,000, so approximately 7,500. We are still expecting further guidance on how this is going to specifically work, but based on what we've seen so far in terms of guidance, that's our best guess estimate. There is an exception to both of these reductions, and that exception is that rehiring employees or restoring wages by June 30th, 2020 could completely eliminate any of those reductions. This is also another scenario where we're hoping to see further guidance from the SBA in terms of what that's going to look like specifically and what kind of documentation you would need to provide to show that someone's been rehired or their wages have been restored to previous levels. Further example, we gave a couple examples already underneath both scenarios. Here's another hypothetical that we could go through, where an employer has a full-time equivalent count at 100, full-time equivalent count at 150, and based against an average of 200. So if they needed to take a haircut for a reduction in full-time equivalent employees, you're looking at 150 divided by 200 to 75%, meaning that they'd have a 25% reduction in what their forgiveness amount is, being that now they could only forgive 700, or they would only be eligible to forgive 750,000 and not the full 1 million amount. In a continued example, it talks about a reduction of, this goes into more about the dollar to dollar reduction for anything below 25%, but also at the same time, it brings up the fact that if there was an assumption that was made that you rehired all the people that you either terminated or restored any reduction in salary, in this example was on June 1st, then the entire $1 million loan could still be eligible for loan forgiveness. Let's talk a little bit more about documentation for all of your loan expenses. From the moment your loan hits your bank, you need to make sure that you're diligent about how you appropriate your funds and document every expense you make with them. When it's time to apply for your loan forgiveness, you want to make sure that you're bringing some of the following documentation to your lender. Your lender is going to be the person that's initially responsible for looking through this documentation, who will then pass it on to the SBA. Some of those documents are going to be very similar for what you used when you applied for your PPP, and that could include your payroll, quarterly payroll tax filings, your 941s, your income, payroll, unemployment insurance tax filings for your state, any paperwork that verifies retirement and health insurance contributions, documents showing payments of mortgage interest, rent, utilities. These could include canceled checks, payment receipts, or account statements. And for you sole proprietors and other self-employed workers, you can use these loan proceeds to replace lost income of up to $100,000. But if you do this, the remainder of your loan must be used on non-payroll costs in order to qualify for your full forgiveness. We'll still go into self-employed here a little bit later. And here we are now at that self-employed slide. And you are entitled to use the PPP to replace lost compensation. However, you're not allowed to use the full amount to replace pay. You're only allowed to replace 8 weeks worth of your 2019 net profit. So how does that work? Let's say your pay in 2019, or your loan amount, we'll just say your average net profit on a monthly basis was $5,000. And if it was $5,000 and we took 2.5 times that, then your loan amount would be $12,500. Now you'd be eligible to just automatically reduce 8 weeks of forgiveness of that pay, which would be $10,000. But what about that additional $2,500? Well, you can't just say, I'm going to pay myself more, because you're limited to those $5,000 per month constraints for the total 8 weeks. The additional $2,500 would need to come from your mortgage interest, rent, utilities expense that you must have claimed or been entitled to claim as a deduction for your expenses on your 2000 Form 1040 Schedule C. If you're unable to make those claims, then that additional $2,500 would continue as a loan for that 1% interest, but you could return the $2,500 as prepayment without penalties. Now, requesting loan forgiveness. You're going to make your request for loan forgiveness to the lender that is servicing or that approved your PPP loan. The request will include those documents that we previously discussed. And you must certify that the documents that you're providing are true and that you use the forgiveness amount to keep employees and make eligible interest, rent, and utility payments. Once again, this is for the certification for forgiveness. We're not talking about the loan amount that may be left over and how those proceeds could potentially be used. We're talking right now only about the certification of forgiveness proceeds. And the lender must make a decision on that forgiveness within the next 60 days before submitting to the SBA for repayment. You're going to want to follow your specific lender's guidelines. We know that lenders have been focused on getting out PPP loans and making sure, and they're still in the process of approving loans. So don't be too hard on your lender and jump back at the end of this presentation and expect them to have all those answers as the SBA continues to roll out guidance. Have a little patience with your lender and see what maybe if they have some general guidelines, but I'm hoping that lenders, more and more lenders will start to release that guidance if they haven't already by the end of this week, if not early next week. There's not a one size fit all, and that's why each lender may have a different, just a slightly different angle on what they're going to be requiring from their clients. And make sure that you fully understand what your lenders rules are for forgiveness. Now, they can't deviate too broadly from the PPP regulations, but they might once again have some different requirements for their own underwriting purposes on documentation that they want to see from you. And one of the questions, at least in the guidance, is can lenders rely on borrower documentation for forgiveness? Yes. Now, the lender does not need to conduct any verification if the borrower submits documentation supporting its request for loan forgiveness and a test that has accurately verified the payments for eligible costs. That goes back to your certification as the business owner to the lender. Basically, the SBA is allowed to rely on your attestation that what you're submitting is truthful and accurate. And if you are committing fraud, this could potentially be a crime. So, you know, there is a lot of money that's going out there right now, and maybe you're not hearing any news stories, but I would expect, you know, whether it's 6 months or a year from now, that people that are trying to play games in a sense of falsifying documents, that you could see some kind of criminal prosecution from the government. Can the SBA purchase some or all of the loan in advance? Yes. A lender may request that the SBA purchase the expected forgiveness amount of a PPP loan or pool of PPP loans at the end of week 7 of the covered period. Now, this is different than the waiting until the loan period, the 8-week period forgiveness is over, and then giving the lender 60 days to process that. Instead, you could now work with your lender at the end of week 7 to start your forgiveness period, which if you're looking for some kind of predictability as a business owner, I would suggest that this could be a great tool for you to quickly find out, yes, am I going to have the full 100% of my loan forgiven or not? And the expected forgiveness amount is the amount of loan principal the lender reasonably expects the borrower to expend on payroll and other eligible costs based on that 7-week period in terms of what they would expect to be used in week 8. So kind of using that 7 weeks as a baseline to now estimate your week 8. And in addition, for when you apply in that week 7, you're going to still be submitting that same documentation that we already shared. And in addition to that, the lender is going to need to provide a detailed narrative explaining the assumptions used in determining the expected forgiveness amount, the basis for those assumptions, alternative assumptions considered, and why maybe there weren't assumptions that were not used. Any information obtained from the borrower since the loan was dispersed that the lender used to determine the expected forgiveness amount, which should include that same documentation that we already discussed. Can the SBA purchase some or all of the loan in advance? This is a continuation from our last slide. And the expected forgiveness amount may not exceed the total amount of principal on the PPP loan or pool of loans, meaning that if your loan was $100,000 and for some reason you came out with $115,000, you're still capped at $100,000 as the total amount for forgiveness. And if you're submitting it by that week 7 deadline, then the SBA will need to provide your lender within 15 days of the date on which the SBA receives a complete report that demonstrates the expected forgiveness amount. Now, I think it's important to note complete report, because when we worked in loan programs back in DC, if there was a missing part of the application, then that means that yes, okay, they received the application, but the time for 15 days to get back to the lender did not start when they received that incomplete application. If the SBA has to go back to the lender and request additional documentation, that 15 days for a response will not start until the lender completely satisfies the information that the SBA is requesting. Now, question 36, this comes from, I know that might sound like an arbitrary question. This is directly from the frequently asked question on the Department of Treasury's website, the FAQ, on whether or not all employees or only full-time equivalent employees are counted for in terms of our forgiveness purposes. And for the purposes of loan eligibility, the CARES Act defined that, or looked at individuals employed on a full-time, part-time, or other basis. This dealt when we were trying to figure out whether or not maybe an employer had 500 employees. And therefore an employer needed to calculate any and all employees that were working for them, including part-time. But question 36 then states that, by contrast, for the purpose of loan forgiveness, the CARES Act uses the standard of full-time equivalent employees to determine the extent to which the loan forgiveness amount will be reduced in the event of workforce reductions. We're looking at that guidance that because they're contrasting it to part-time employees, that the SBA is truly focused on full-time equivalent employees. Now, what that means, though, is we still need a definition on what full-time equivalent employees are. Is that someone that works over 30 hours? Who is that if you're in the service industry and you've got waiters or waitresses that are working fluctuating hours? Who's part-time? Who's full-time equivalent? So stay tuned for that guidance. That's an important part that we're still waiting on from the SBA. And other questions that still haven't been answered that we're still looking for. So in case you have questions today on the webinar, which we'll try and get to as many as we can, but here's a few that we're still asking and looking for answers for, which is, what if a business is closed by a governor and doesn't want to use loan proceeds to pay people who are not working? When is the utilization of proceeds for unintended purposes risky or potentially fraudulent? Can a business rehire in any position, or does it have to be a similar position? Does it have to rehire specific employees when furloughed or laid off? Can the replacements be anyone? Is there an exception for poor performers or retirees? I think that this one's going to be very common. When the June 30th restoration of workforce provision remains as written, If so, what is to prevent employers from waiting to rehire until the last possible moment, bypassing the intent of the CARES Act to keep workers on payroll? This came up. I was speaking with a colleague earlier today in terms of what happens if you could have all of your payroll, if you had 10 full-time equivalent employees all of last year, but now you only have 5 and you're still maximizing your payroll because you have a number of part-time employees now instead of full-time equivalent employees. You could still max out your potential forgiveness amount, but is it going to be reduced? Or how do you play games there? And what's the future guidance from the SBA on that restoration? How will the timing of payments work for expenses incurred but paid after the 8-week period? For you bookkeepers or CPAs or business owners that are big into cash or accrual accounting, are we factoring when the costs were incurred? Which I think that that's going to be the answer in terms of looking at all the guidance. I'm not saying that that is. We still need the answer from the SBA, but I would be leaning towards the side that it's costs incurred, meaning that in your last week of the forgiveness period, if you have costs that are incurred that week for payroll, that those would be forgiven and not necessarily when you paid them. That also deals with week 1, that if you have a payroll check for the last 2 weeks that you're paying in the forgiveness period, that if one of those weeks was before, that the first week is not part of that forgiveness amount. Even though you're making a distribution, the expense was not incurred during that 8-week forgiveness. Well, only 1 week, not both weeks. So one of those weeks would be forgivable, but not both. What about interim pay periods in which the workers were employed, but payment deferred to the next normal pay date? Once again, that deals with, I believe that as long as they incur that expense during that pay period, that it should be forgivable. Does the 75% payroll cost requirement refer to loan amount or forgiveness amount? And we do, it look like have an answer to that, which is that payroll costs must account for at least 75% of the requested forgiveness amount. Meaning that if your loan amount was $100,000, but your forgiveness request is only, let's say, $50,000, then your requested forgiveness amount, payroll costs must be $37,500, because that's of the forgiveness request, not of the total loan request. Will expenses paid with forgiven loan proceeds be tax deductible? Meaning that we know that there's not a tax income gain for the business or the owner that's going to have to report the forgiven amount, but can you both receive forgiveness for this amount and still claim the payroll that you're making as an expense and deduct that on your taxes? I think that it's the intent of Congress to say yes, but we're still waiting on guidance. And when I say yes, meaning that I think that Congress is intended for it to be included as an expense. Does rent apply only to real estate? Will this extend to vehicles, equipment, etc.? That's another great question, especially for all of you contractors, construction companies that may not have office space. Will there be any adjustments if the business owners receive funds prior to having clear rules on appropriate ways to use these funds? I would expect so, that there would be room for you business owners not to be put in a bad spot, that Congress should make exceptions because some of you have already started your 8-week program before even last week. So you've needed certain guidance and reliance on some of the rules that are out there already. And how will each bank interpret and apply the evolving guidance from the SBA? We covered that a little bit in the presentation by just saying, make sure you're in contact with, excuse me, with your lender, because each lender will have slightly different rules or underwriting guidelines on what they're going to require from you. That's not something that us as advisors are going to have every answer for each one of your lenders. So that's a responsibility for you to make sure you're staying in touch with your lenders on that. Now I guess we'll go ahead and jump into the Q&A.
Okay, thanks. Thanks so much, Graham. I'll start with one that came through early on. Is the loan retroactively to the beginning of the stay-at-home order?
No, the loan is on the date starts. Well, when you say the loan, the forgiveness, since this is just focused on the forgiveness period, it's focused on the day that the lender makes those funds available to you, not to the order, but to the PPP loan origination date. Which
actually is better for people, especially if they are in a field where the business, that industry is starting to open up, such as construction, because they could make money with the funds that they are receiving and the work that their employees are doing.
Yes.
So the next question, now that some of us in the construction industry are back to limited work, can we use the SBA PPP loan? I think I had too many P's. PPP loan to supplement holes in payroll.
Can you say that one more time, Colleen, please?
Yeah, now that some of us in the construction industry are back to limited work, can we use the SBA PPP loan to supplement holes in payroll?
Yes, that's what it's designed to be there for, is to cover your payroll costs. That's the primary purpose of this loan. So if you have people on unemployment, once again, that does not make you ineligible to participate in the PPP program or in the forgiveness portion, you definitely should be putting, if you can, scaling back up as long as it makes sense, and putting your employees back to work, which is now forgivable underneath the PPP forgiveness portion of this loan.
Great.
And
Our bookkeeping.
Excuse me, Colleen, I'd like to add to that too. Part of the purpose of the act is for you to be able to keep your employees associated with your business, rather than when you come out of this having to hire and train new employees, particularly your skilled employees.
Yes, thank you. So our bookkeeping service will be tracking and logging our expenses closely. Does our bookkeeping service qualify as a forgivable expense?
If your bookkeeping service is an independent contractor, no, it does not. If your bookkeeper is in-house and a W-2 employee, then yes.
But it can be used as part of that 25%, correct?
Yeah.
That is not, that you're not counting as payroll.
No, my understanding is that it's only for rent, utilities, mortgage interest. In terms of what could be forgiven underneath the loan, Mike, did you have a different understanding?
Well, I mean, I would have thought that would have been yes, as long as it's not being paid under a 1099. It's like a billed service. I would think that would be allowed.
Okay. So maybe that's something we can follow up with then, since we don't have a clear answer. If Mike and I, well, at least I have some questions on that, on whether it could be for anything outside of rent, utilities as an additional cost. I look at a bookkeeper as a separate company or an independent contractor, which it seems to be that those additional costs do not qualify for forgiveness. That doesn't mean that you couldn't potentially use the loan for that. It just means that it may not be forgivable.
Got it. Let's see, here's one. Let's use this example. I have 4 employees. One employee is staying home, but is not able to collect unemployment. One employee can work pretty much full time, and 2 employees are only on part-time status. I am assuming that I can use the PPP funds to pay all my employees for a 40-hour work week. Can I use it to pay overtime for the employees that are putting in time for my business in order for me to remain in operation?
Great question. But to give you a clear answer, it would be important to know, were all those 4 employees factored into your original loan amount? Because that loan amount that you received, let's say it's $30,000, but if those employees weren't working, all of them 40 hours a week, then the loan amount would have been based on those hours. And now if you're trying to put all those employees at 40 hours a week and keep them relatively at the same pay, then you're most likely not going to have enough funds in your PPP loan for direct coverage of forgiveness of that. So be careful when you're looking at, does the math add up for what you can have forgiven underneath your loan? And then also, there is, at least what I've seen, no restriction on paying people more, whether it's overtime, additional hours, that there's only restrictions on paying people less than 25% of what they received in the past.
Okay, here's another one. SBA rules and regulations number 2G. Anything expressly excluded, ? 3 says federal employment taxes, etc. Is this referring to the taxes normally taken out of each paycheck, or is it referring to the monthly federal tax deposit and the quarterly taxes that the employer pays?
I'm not sure where that's coming from off the top of my head, but your forgiveness amount will include state and federal taxes on the employee side that is paid as part of your gross payroll. If that does not answer your question, feel free to follow up and maybe send that specific guidance that your question is about directly. Colleen, is that best sent if it goes to you or Peggy?
Sure.
Okay.
Yes. Yes.
And then we can work on answering that for you.
And if the question is the employer side of your taxes included, that is a yes.
Okay. If the person that submitted that question, if they want to submit the Q&A, we can get back to it as we go through these. Does the forgiveness option apply to FTEs who earn benefits only, or is it inclusive of our entire staff, including part-timers who earn no benefits other than sick time?
Entire staff.
How does an individual self-employed disperse the funds to cover the 75% payroll requirement if they don't normally cut to themselves?
The payroll is it's automatically forgiven. So there's not at least in terms of, there is no guidance right now that states that they need to cut themselves a check. Is the fact that using that $5,000 a month scenario is their average income for last year. If that was $60,000 on their Schedule C, line 31, $5,000 a month, 2.5 times that is $12,500. So that would be their total loan amount, and they would just have $10,000 forgiven automatically. In terms of what they would need to submit to have that forgiven, that's a great question because it's not going to look like normal payroll costs. And I don't know if I've seen that guidance yet from the SBA. Mike, have you seen anything there?
No, I haven't. It's like you said, I think the portion is automatic. It's a matter of getting that extra 25%.
Okay, this from Alan Applegate. How to determine whether your company is seasonal?
I would just go, at least right now, I would base that on whether you elected as a seasonal business in your PPP application. So since this presentation is focused just on forgiveness, I would say look at your initial application and see if you made that election on your application. If you did, then you would then be looking at the seasonal option in terms of a reduction in full-time equivalent headcount.
Okay, this from Lexi Paoli. On the rehiring, if we rehire all employees by June 30th, we should still be eligible for forgiveness even if we rehire during the 8-week period that we use the loan for?
Yes, and I think I'm looking at that question right now. I think she's saying if they don't rehire during the 8-week period, that yes, according to the SBA right now, which we're still hoping they'll produce further guidance, but at least it's stating right now, the regulations that if you restore your full-time equivalent employee headcount by the end of June 30th, even if you don't rehire during the 8-week forgiveness period, that you would be eligible still for the max forgiveness. But what the intent behind this is just making sure that if you don't rehire someone, are you fully taking advantage of the PPP program? Because if you're not paying people, then how are you actually having this loan forgiven? And that's where the windfall or the great benefit in this program is almost using it like a grant. So I want to still emphasize that don't necessarily think about, well, I just want to restore headcount by the end of June, when you only get the forgiveness. Once again, to qualify for the forgiveness, you still have to have those actual payroll costs. So you can't just rehire someone at the end of June. And if you don't have any payroll costs for that person, well, then there's nothing to forgive on that person's behalf.
So kind of what you're talking about is if you need some services that are outside of what you normally would do, to be able to hire someone to help you do those and then restore the full head count by June 30th. So you actually did spend the money in the 8-week period, but it wasn't for the same FTEs, same people. Is that kind of what you're saying, Graham?
Yes, that or if they're just this thing, I didn't know if this person was suggesting that, they just have this money and if they still rehired them by the end of June, that they'd be able to forgive that amount. And I'm trying to explain to that person that they would still need payroll costs in that time period to actually have it be forgiven. There's what you're eligible to forgive. So restoring that person could potentially mean that the full amount could be eligible for forgiveness. But then the second step is you still have to produce documentation that the person received payroll during that 8-week period. And in this scenario, if the person is just rehired at the end of June, well, there is no documentation of actual payroll costs. So while you might be eligible for forgiveness, you actually have no payroll to be forgiven unless you are hiring other people like you mentioned, Mike.
How I like to think about this is this PPP program, the grant piece, is that the government is paying you to pay your employees for free. So that's, they're giving you money to pay your employees. And
Right.
Think of it that way, then it kind of, for most people, it clears things up. The next question, can an employer pay a contract worker that is a regular part of his crew, even though he is not an employee?
My understanding, and this goes back to even that bookkeeper question, is that if they're 1099, those payments to that person do not qualify for forgiveness.
Okay. Could they hire that person though as an employee for that 8-week period? Instead of hiring them on a 1099, hire them as an employee?
Well, part of it is, a part of it is that they're eligible to apply for themselves for the loan and have it forgiven. And that's why they're not included in your business.
Yes, that's exactly right. And Colleen, you do bring up a good question of, well, if you're looking to find, and this has actually been brought up by some clients and asking, well, could I just hire someone as a W-2 that would normally be an independent contractor? Well, sure, you could look at that, but now that employer is exposing themselves to all kinds of different employment law when you take on a new employee rather than a independent contractor, and what kind of benefits, and are you licensed to bring on that type of work that the person's coming on to do for you? Does your insurance company cover that person? So sure, maybe someone could look at paying them differently and forgive that amount, but what kind of new liability and legal issues are you as a small business exposing yourself to?
Sure. Okay, if your property rent agreement states that your rent fee is to pay property taxes, could that be possibly forgiven?
Interesting question. I'd look at that as the total cost of rent. So I would say yes, that if that's part of your total cost of rent, that I would look at trying to have that forgiven. And I doubt that Treasury will have that specific of guidance to that answer. So let your lender make the determination on that.
Yeah, I would think that should be forgiven. Just from what my dealings with leases. So Heather Short asks, is rent forgivable if self-paid to an LLC?
When you say self-paid, maybe that means another LLC that you own and you're paying rent to that other LLC. If there's a rent agreement that was already established before February 15th, 2020, my understanding that yes, that's going to qualify, but you can't now make up a new rent agreement if it's after February 15th. So there are some kind of restrictions there where they don't want people abusing this forgiveness, and they want to make sure that things have already been, and they may actually look at past documentation of actual rent checks being paid. If you think that, oh, I'm just going to draw up a new agreement, well, be careful of that, because who knows if there could actually ever be an audit to see if rent checks were actually being paid and processed.
Are shareholder distributions through an S corp allowed?
My understanding is no, but your salary as a employee of that S corp would be allowed in terms of payroll compensation.
And what if you were an S corp and say, or just two people as owners of that S corp and you didn't have employees? Would it be allowed that way? I don't know.
If you had two people in the S corp and no employees, well, there's kind of two situations in an S corp, which is either you're involved in the business and you're making quarterly salary payroll payments to yourself as being involved in the business, or you're saying, no, we're not involved in the business at all and everything is net profits. And I'm of the belief, and without further guidance, of saying that only payroll costs associated with you working in the company are eligible, not only for calculating your PPP loan, but also the forgiveness portion.
Okay. There's an employee on self-quarantine due to exposure, so out for 2 weeks. Do I need to be giving paid time off for that employee in order to be forgiven? And then the follow-up is, I heard part-time employees can be combined to equal a full-time employee. Is that true?
The PTE to FTE, they're equal in terms of calculating headcount to meet the size standard of whether or not someone falls underneath the 500 employees. So to that extent, they're equal. But as we discussed in that question 36, where Treasury provided specifically in their FAQ, by contrast, for the PPP forgiveness, that is not true, that they are not equal, that full-time equivalent is different than a part-time employee. However, we still don't have an answer of what a full-time equivalent employee is exactly. And when you talk about self-quarantine for 2 weeks, that deals with potential Families First Care Tax Act and how people will be paid there for that time, and whether or not you qualify there, which if you go back through our previous presentations, we're not going to jump into that question right now.
Okay. Kathleen Winter, is there clear guidance on what is considered utilities?
No, there's not clear guidance right now on what are utilities or even what is rent. And we brought that up in terms of our trucks or automobile, vehicles used in construction equipment. Is that going to be considered rent? I think it would be fair to assume utilities are your water, electricity, garbage, and then a little bit more gray areas when you start to get into, I think that phones would be covered. I'd be leaning towards that, but it starts to become a little bit more gray. But I would just continue to document, make sure you have clear records for everything, and continue to check back, okay? Document, check back. There is going to be new guidance coming out. Stay up to date, come back to our website, and we'll do our best to make sure that we're putting out as current a guidance as possible.
Okay, and Lexi says, I think we could spend more than 75% on payroll without rehiring one employee.
That's okay. There is no, you can do 100% payroll in forgiveness. So there is no max on that. It's just a minimum 75% on payroll.
Okay. My initial paperwork from the SBA includes interest payments on any other debt obligations that were incurred before February 15th, 2020. Does this include, for example, credit card debt?
My initial paper, I'm reading this question, includes interest payments on any other. Are they saying on what that the loan cannot be used for that or forgiveness?
I think what they're referring to is the 25% that it can be spent on, but is not considered forgivable. The forgivable portion.
I don't think interest payments on other debt. I don't know off the top of my head. Mike, do you have any answer to that?
Yeah, I would be leaning towards that the interest payments would be, but not paying down the principal balance that existed prior to February 15th.
Yeah.
And, and some of this gets kind of confusing when you're going back and forth between the EIDL and the PPP, where the EIDL loan will allow you to, the short-term revolving debt, you can use it for that. That's the EIDL loan. This was more focused on trying to keep your payroll and understanding that you're going to have expenses outside of payroll in order to have payroll, and just wanting to cover those expenses.
Okay, I just want to share that I'm going to keep on going through these questions, but in case people are jumping off, I want to share my screen for a moment. Yes, and here, and make sure everyone knows that on our website of Choose Column First, you can go to Business Resources, and under Loans, we have a section here that's about the different types of loans that are available. And under the Paycheck Protection Program here, we have those list of questions, the FAQs, and also we have at this right here is the PPP calculator, that if you click on that, let's see if it all comes up. Might not, since I am on the webinar. Oh, there we go. It's got the calculator here to help you, that you probably did, to figure out how much you could borrow, but it also has the forgiveness portion. So this may be a good resource for people that are trying to figure out how much they might be able to have forgiven. So I'm going to go back to this and stop sharing. Okay.
Colleen, while you're sharing that screen, can you just show people where to go for these presentations of
Yes.
if they want to see previous
Very
ones?
good.
Please?
Absolutely. So let's see. I'm back to the choose column first page and back to the home page here. And under business resources here are the recorded webinars. So we've got a lot of information under news and resources, a lot of information on grants. We've got one coming up soon for community development block grants for people that are at 80% of area median income or lower. And then the loans portion, here's recorded webinars. Here's a bunch of downloads. And then here too is contact the advisor and the list of all of our advisors. So hopefully that will be a good resource for folks. So I'm going to go back to now the Q&A. And
Colleen?
yes.
Yeah, this is Brian. Just a comment on what Graham was talking about on document. I know a number of banks are suggesting that with the proceeds of the PPP to open a separate checking account with those proceeds and then to pay those what you expect to be forgiven to be pay those expenses out of that separate account instead of commingling with your general account.
Brian, this is Graham. Have any of your lenders provided you guidance on doing reimbursements from, let's say you open up a new checking account and it's with a new lender because you couldn't do the PPP loan with your current lender. Have they shared doing a reimbursement schedule? So if you've already got a lot of things on auto payment out of one account, what about doing reimbursements from that new checking account that has the PPP loan directly for those auto pay?
No, I mean, auto pay didn't factor into the equation at the time. They were just concerned that a lot of the funds on the commingling might be a little more difficult tracking for the average small business.
Right.
Okay, can we pay all staff bonuses to cover some forgiveness? We are general contractors that normally work many prevailing wage jobs, which we are not working right now. So our request was much higher than our current payroll will be.
Well, I think when you're looking at bonuses, it's not the intent of Congress to create massive windfalls for people. So I'd urge you to be very careful that if it's been your routine history to provide bonuses to workers, and you can show that over the last year or two, that as long as those bonuses are consistent with what you've done in years past and potentially prorated for that amount that, or for that 8-week period, that yes, you could do that, but I'd be careful on overextending those bonuses and instead looking at ways to give your contract or your employees additional hours of work rather than a straight bonus.
Okay, next question. If you are self-employed and rent a building to your S corporation, can that, stops right there, but I'm assuming it's, can you use the PPP loan funds for that use?
If this goes back to one of our slides that if you're self-employed, then your rent would have needed to either be reflected in your 2019 tax return, or you would have needed to have the option to do that, but maybe you forgot to or didn't include that.
Okay, this is from Reve O'Leary. Can rent include a storage unit? If so, would it only be for the amount to cover the 8-week period, or would it be for any payments made in the 8-week period?
Well, my understanding is that, and this goes to, is it when payments are made, or is it when the costs are incurred? which we're still waiting on a little bit of guidance. I'm of the belief it's when that the costs are incurred, so for the 8-week period. But if your storage unit is, once again, something that could have been deducted as part of your business expense as rent, then my belief is yes, it could be included.
Okay. Are owners of S Corps allowed to raise their salary?
Yes. At least I haven't seen any guidance that they're not allowed to raise their salary. There's only been restrictions on reduction. However, Congress did build in that $100,000 cap. So you're not going to be able to pay yourself more than $8,300 a month.
Can you use that rent for the loan? That's back to Jeff Howitt, who asked the previous question about, let's see if I can find that. If you're self-employed and rent a building to your S Corp, can you use that rent as part of your loan? Yeah.
Yes, it's potentially forgiven if it was either listed in your 2019 tax return, or you could have actually listed it but failed to do so.
And from an anonymous attendee, so if the independent contractor is a DBA of a corporation, his corporation applied for a PPP, the corporation pays salary to its employees, and can it also pay the lost income that the DBA brought into the corporation as a contractor?
That's a web.
Yeah.
I don't know where this question is particularly going. If they're an independent contractor, is it doing business as of a corporation? So, okay. So if the corporation applied, okay, and the corporation pays the salary to its employees, can it also pay the lost income to the contractor? No, because the contractor needs to apply for this directly, that you as the independent contractor are eligible to apply for a PPP loan, and corporations are not allowed to forgive the amounts paid to contractors. If I didn't answer your question correctly, that might be a phone call or a follow-up email.
Okay. From Michael McQuay, is interest on business debt included in the 25%?
It included in business debt included in the 25. It's our understanding that yes, if the interest or if the debt was incurred before February 15th, 2020.
Mm-hmm. What if it was an SBA loan and they are deferring all the payments for that period of time that the SBA is allowing? Does it make sense to pay that interest then with those funds if you don't have other items to be spending it on that would be acceptable?
Is the SBA deferring interest, meaning that it's still owed, or is it actually
Forgiving? I believe it's deferring. Brian, do you know?
No, it is forgiving. It's that they're making principal and interest payments for 6 months.
Wow, that's great. Okay.
So I would say on that one, I don't think you'd want to do that because this loan ends up at a 1% interest rate, and most likely those other ones are at a higher percent.
You're right. Yep. Okay, again from Lexi, I'm not asking these questions, not sure they, oh. Lexi says these questions are not coming from her. It's got her name attached. So that, it looks like, is about it. Do we have, I think we've covered all the questions. And if no one else has any, oh, yeah, I think we've got them all, didn't we? Yep, looks like we have. So if that is about it, I want to end with, once again, thanking our business advisors that have been volunteering their time to help hundreds of different businesses within Clallam County and Jefferson County. and specifically thank Graham for his sage advice as a CPA and an attorney, and with experience at the federal government level. So I think that concludes our webinar at 4:10, and we will have the slides, which I think are up now, and we'll get this webinar that is recorded up under the webinar link. So enjoy the rest of your day. Tomorrow we will be hosting Derek Kilmer at 8 a.m. and we hope you'll be able to join us there. If you have any questions for him, you can send them to info@ballam.org and we'll add them to the list. Thanks very much and enjoy your afternoon. Bye.
Thanks, guys.
Thanks, Graham. Thanks, Colleen.
Thank you. Okay. So you can kill it.
Oh, is it not, did it kill?